Hi guys, this is Ola Ibiwoye of Commercial Property Club podcast. Welcoming you to another episode of today's podcast, the show where we dive into the ins and outs of smart real estate investments. I'm your humble host, Ola Ibiwoye, and today we will talk about a critical topic that can make or break your investment strategies. Guess what? The impact of interest rate on buying an apartment building. Yes, we are in that era in which interest rates are up there. So let's talk about the impact on buying apartment investments out there, okay? Whether you're a seasoned investor or just getting started, understanding this dynamic is essential. So grab your coffee, your notebooks, and just sit down and take down notes as we discuss this particular topic in our pod chapter today here in Commercial Property Club podcast. Well, the first thing I'm going to discuss about interest rate today is why interest rate? Why does it really even matter? Let's start with the basics. Why do interest rates matter when you're buying an apartment building? Well, interest rate influences the cost of borrowing money. It's that simple. When rates are low, your loans are typically cheaper, making it easy for you as an investor or somebody trying to get into apartment investment to finance your purchase. Well, conversely, when rates rise, borrowing cost increases. Yes, it's vice versa. Rates are low, it's cheaper to borrow. Rates are high, it's very expensive to actually borrow. So ultimately, if there's a rise in rate, it cuts into your profits. Now, imagine you're considering buying a $2 million apartment building if you decide to finance it at 75% loan to value. In other words, the bank will bring 75% of the $2 million while you come up with the rest of 25%. That's what the 25% financing means. That's just your loan to value financing from the bank. Now, the purchase price with a 30-year loan, the interest rate you secure will significantly affect your monthly mortgage payment, no doubt about that. Now, let's say you put a 30-year, like I said, 30-year loan on it, and an interest rate on that, which is high. Your monthly mortgage payment ultimately would affect your cash flow if your rates are very high. Let's look at that critically, the direct impact on your cash flow, and see what I'm talking about. Let's say you're financing at 4% interest rate. Your monthly mortgage payment might be around $7,200. Now, when you bump up that rate to 6%, that just would ultimately jump to about $9,000. Exactly, actually $9,000. Now, do you see the difference? $1,008 per month. Annually, that's $21,600 annually, depending on your rental income. This could mean the difference between a profitable property or that one's that barely breaks even. Now, high rate can also reduce the price you're willing to pay for a property. After all, you're looking for an investment that generates a positive return, and a higher monthly payment does definitely eat into your return. Now, let's talk about another aspect, which is what I call strategies for managing interest rate risk. Now, let's say how do you navigate these interest rate fluctuations? Here's some 3 aspects that I would say would help when it comes to navigating high interest fluctuations, or rather period. Locking in your fixed rate if you anticipate a rate rise. It's one way to do things. In other words, if you anticipate a rate rise, consider locking your rate of loan in as quick as possible, and this guarantees your interest rate and keeps your payment predictable, at least while you're analyzing what you're still doing, bringing your deal to close in terms of doing some other things. Once you lock in your rate at a fixed rate, it might fixed rate might be slightly higher upfront than adjustable rates. Your adjustable rates are like, back and forth rates. They may provide stability over the long term. Adjust your purchasing criteria also too might help you when rates are high. Focus on properties with high cap rates, or those with value had potential. Those with value had potentials. These properties typically offer better cash flows and help offset high financial cost. Another aspect I want us to look at today is the aspect of increasing your down payment by putting more money down. Yes, by putting more money down. If you consider when you're trying to buy an apartment, you put more money down, you can actually reduce the amount of money that you borrow, which lowers your monthly payment. And this can help maintain your profitability even in a high rate environment. Let's talk about another thing that is pivotal in this topic we're talking about today: evaluating the market that you're investing in. Interest rate don't operate in a vacuum. It doesn't operate by itself. It's just one of the ratios, or rather one of the things you consider when you're purchasing your apartment investments out there. I'm talking about now evaluating your market. They're influenced by your market demography, or your market situation are influenced by economic conditions. For example, if rates are climbing because the economy is booming, demand for rentals may also rise, allowing you to increase rents. On the flip side of things, if rates are rising due to inflation concerns or tighter monetary policies from the government, you need to be careful evaluating the market's ability to absorb your rent increase. So researching is your best friend. Yes, you gotta research. You got to research the markets you're going into, and most especially in a situation like that, which is something you can do without understanding your local market dynamics, your tenant demands, your employment trends. Those are very important. Let's talk about the long-term view when it comes to interest rates, and some of the factors also to that I might just put in before we finish our discussion today. Remember, real estate investing is a marathon, not a sprint. While interest rates are crucial, they're just one piece of the puzzle, one piece of, or rather, one part of the pie. Other factors like property location, market condition, long-term appreciation also play significant roles in determining the success of your investment at large or down the road. Some investors even thrive. I mean, these are savvy investors. They thrive in high interest rate environments, and no doubt about that. Then there are cases like that too, to the advantage, capitalizing on reduced competitive edges of other investors. So they hold off buying, and these are people that will jump in and bid for properties and can open doors of opportunity that usually would not exist in your low rate aspect of things. So there you have it, a deep dive into how interest rate impact our investment strategies for buying your apartment buildings, either your 20 units, your 30 units, your 50 units, your 100 units, however, how much you're budgeting for the purchase of your investment. So let's recap what I talked about. I talked about interest rate affecting your cash flow, property valuation, and the overall investment strategies that you're going to be embarking upon to determine your investment priorities or investment parameters. But with careful planning and strategy, and also good decision making, you can actually navigate any interest rate environment and still achieve your financial goal. Okay, so don't get all kind of like timid. Jump into the investing market, even if it's a high interest rate times or period. There's still room for deals to go down. There's still room for you to actually be able to be a good investor in markets like that if you understand what to do or how to do it. Just surround yourself with the right team, surround yourself with the right professional, and that's what I have to say about interest rate today. If you find today's episode helpful, don't forget to subscribe, leave a review, and share it with a fellow investor or a fellow newbie out there trying to get into real estate. If you have any questions or any topic you'd like me to cover, please don't hesitate to reach out to me on social media. Drop an email at commercialpropertyclub@gmail.com, and also to Ola.Ibiwoye at Estateserveinvestment.com. Estateserve Investment is actually a parent company, and Commercial Property Club podcast is a subsidiary of Estateserve Investment. So reach out to me on LinkedIn, YouTube channel, Instagram, and Facebook. I should be able to get back with you. Or give me a call and we can talk, okay? Until next time, happy investing. All right, this is Ola Ibiwoye, Commercial Property Club podcast host today. I will see you again in the next episode. Thank you.